With the median San Jose single family home now well over into 1.7 million, many homeowners are looking at condominiums and townhomes as cheaper alternatives. But here's some things that you need to know. When you buy one of these properties, you're basically buying into an HOA, which is an organization that basically manages your property. So let me help break down everything that you need to know about HOAs, the regulations that you must follow, and the critical questions that you should be asking yourself before you actually buy one of these. And stay tuned until the end because I'm going to explain to you why the HOA's reserve funding could make or break your loan approval process. Hi, I'm Steve Moon of the Steve Moon Group, your San Jose realtor. If this is your first time on this channel, we talk about real estate and things that are happening in the San Jose metro area. Let's start with the basics. An HOA is a homeowners association, which is basically a corporation put in place for two main purposes. First, it's to maintain the value of your property and to make sure that the common areas are upkept. Their job is to maintain, preserve, repair, and replace anything within the common area. Second, to establish rules that ensure that all homeowners can enjoy the communal property. HOAs must follow the regulations according to the Davis-Stirling Act, which is a California law governing common interest developments. Did you know that there are some 55,000 HOAs in California? This is incredibly common, which is why we all need to understand how and why they work. So there are two main types of properties that you'll encounter within an HOA. First, condominiums. So with these, you only own the interior space within the walls. So you don't own the structure, the exterior walls, or the common areas, or even the land. Secondly, you'll encounter planned unit developments, or PUDs. With these, you own the land underneath you, and typically you own the walls and the structure of your building itself. You'll find single-family homes, townhomes, and some condominiums structured as PUDs. Here's the key. Some PUDs maintain the exteriors and some don't. So who's responsible for termites, roof repairs, and exterior maintenance? These types of details are within the CC&Rs. Banks care about the differences between condos and PUDs, so please verify which type that you're buying in the preliminary title report that you get from the title company. If you're buying a condo, you must know about the new Senate Bill 326. This new law requires that condominium associations to do inspections of balconies, decks, exterior stairways, and walkways for safety. The initial inspection deadline was January 1st of 2025, this year, with inspections required every 9 years thereafter. Only licensed structural engineers or architects can perform these types of inspections. And here's what to ask when buying a condominium or a townhome. First, has the SB 326 inspections been completed? Second, can I see the inspection reports themselves? Third, were any deficiencies found and have they been repaired? Fourth, how much will it cost and is there any money in the reserves to address them? If an HOA hasn't completed their inspection or has unaddressed deficiencies, you could face a special assessment for these types of repairs. So it's important to understand this before you get into contract. So who runs an HOA? A board of directors runs the HOA as it is spelled out in the bylaws with the assistance of a professional management company. So it is essential to review the bylaws to understand how each board members are elected and how the HOA itself is governed and who the point of contact is at the property management company. The Davis-Stirling Act requires that sellers provide the following types of documents to all buyers: articles of incorporation, bylaws, the CC&Rs, which are the covenants, conditions, and restrictions, the current budget and all financial statements, the reserve study, 12 months of board meeting minutes, insurance policies, and any types of pending litigation. See, the seller is responsible for providing a complete disclosure package, but they don't always necessarily have everything in hand. So check with your agent to ensure that the package is completed and delivered to you. And if you need assistance, ask your agent to help walk through and look at some of these things with you. So these are some key questions to ask before. Is the property under litigation? This is critical because many lenders, including Fannie Mae backed lenders, won't finance properties in HOAs with active litigation. So, who maintains what? Who handles the termite inspections, the plumbing repairs, the HVAC, roof repairs? Responsibilities vary significantly between PUDs and condos. And what about balconies? Verify that SB 326 compliance and reviews and their findings. And what rules must you follow? Check about pet restrictions, occupancy limits, parking rules, and rental restrictions. Make sure that you can live with these rules before you buy. You don't want to buy an investment property only to learn after the fact that the HOA has restrictions against rentals. Here's what could make or break your loan approval process: the HOA's reserve funding status. The reserve study shows whether the HOA has enough money set aside for major repairs like roofs or sidings or these balcony repairs. Look for the reserve funding in terms of percentages. Something below 30% is a red flag. It means high risks of special assessments that may be coming. And here's why this matters. Fannie Mae and most other lenders will not fund loans if the HOA reserves are what they consider to be too low. Low reserves indicate that there's financial instability and high risks of special assessments coming down. Also, look for shortages per door. This will tell you if a special assessment is highly likely. If the HOA needs to replace, for instance, all of the roofs, or they need to deal with replacing and repairing unsafe balconies, but the organization itself hasn't set aside enough money to cover these costs in the form of reserve funds, each homeowner, you, could suddenly owe 15 to 20,000 per unit to make up that difference. Look at the meeting minutes to get a heads up. If there are major capital expenses or some sort of special assessments coming down the line, the board members will have been talking about them at meetings for extended periods of time. These types of issues don't just pop up as surprises. They would have been brewing issues. For condos, make sure that the balcony inspections findings and repair costs are factored into the reserve study itself. If they're not, the reserve may look better than they really should be. It may be smart to give yourself some time to review. So include a common interest development contingency in your offer. This gives you time to review all of the HOA documents and back out if you don't like what you find. So don't waive this contingency. All of this information can be overwhelming. So consider using an HOA review service. These are companies that will review all of the documents, verify compliance, and provide summaries so that you understand everything without having to wade through hundreds and maybe thousands of pages of documents. Think of it like a home inspection, but for the HOA. This could save you tens of thousands of dollars in unexpected special assessments coming down the line. So let's talk about key takeaways. Understand the difference between condos and PUDs. For condos, verify that SB 326 balcony inspections have been completed. Check reserve funding. Remember, lenders won't fund if they consider reserves to be too low. Review meeting minutes to understand the major HOA issues. Verify that there's no pending litigation. Read the CC&Rs to ensure that you can live with the restrictions that are in place. And include HOA contingencies in your offer if you need to. and consider hiring a professional HOA review service. Remember, buying into an HOA means shared financial responsibilities. Do your homework up front to avoid any costly surprises and ensure that you can actually get the financing that you really need to buy into these communities. I hope you found this video to be helpful. And if you have questions, please comment below. And if you found this to be valuable, please like and subscribe for more home buying tips or just things here in San Jose metro area. Thanks for watching. I hope to see you in the next video.